All right, we're unmuted.
Okay, good morning, everyone, and welcome to the disability meeting for December 2024. Please make your introductions for the record.
Stephanie Denberg from the Commissioner Tisch.
Nicole Jambrisi, Police Pension Fund, present by invitation.
John Dorset, designated control Brad Lander.
Brian Berge, representing Mayor Eric Adams, present.
Phil Dukes for Commissioner Preston Nyblack for Finance.
Damian Law, alternate for Commissioner Nyblack for Finance.
Arthur Agner, PBA.
Chris McGrath, PBA by invitation.
Raymond Salamone, PBA.
Alice Cerno, PBA.
Mark Marino, PBA by invitation. Joe McConey, PBA by invitation. Anthony Burley, SBA.
Daniel Jaffe, CEA, LBA, SBA, DEA by invitation.
Jeffrey Ward, DEA.
Victor Funi by invitation as counsel, CEA, LBA, SBA, DEA.
Chris Monahan, CEA. Also, I have the proxy for Lou Turco of the LBA.
Mark Tiskevich, Office of the Actuary by invitation.
Andy Vincenzo Miller, Police Pension Fund, present by invitation.
Bob Senskestead, Pension Fund, present by invitation.
Kevin Holleran, Pension Fund, present by invitation.
Margaret Ross, Law Department, present by invitation. Official Law and Medical Division, present by invitation. Meet for Brooks, Medical Division, by invitation.
Diaz, Police Pension Fund, present by invitation.
Christine Blige, Pension Fund, present by invitation.
Stanley Thomas, Police Pension Fund, by invitation.
Anna Russo, Police Pension Fund, present by invitation.
Ralph Mondale, Police Pension Fund, present by invitation.
David Morris, PBA, present by invitation.
Maurice Raleigh, PBA, present by invitation.
Karen Lau, Police Pension Fund, present by invitation.
Raymond Gotham, Police Pension Fund, present by invitation.
Lenny Almonte, Police Pension Fund, present by invitation.
Angela Tripp, Police Pension Fund, by invitation.
Antoinette Wynn, Pension Fund, present by invitation.
All right, how's everybody doing?
Excellent.
Public meeting, page 1, to accept minutes of the previous meeting, Wednesday, November 13th, 2024. To confirm the next meeting date, Wednesday, January 8th, 2025.
Actually, we had talked about doing it for January 13th.
We did.
And so if that's still acceptable to everyone, I'd like the record to accept that this meeting will be January 13th.
So we'll note that for the record. I believe we all agree to that.
So note. Yep, January 13th, that is correct. So. So to confirm the next meeting date is going to be Monday, January 13th. So noted. Article 2.
Article 2, pages 2 through 61, I think. So move that, please. Nothing about unfortunate nature.
Thank you very much. Page 62 to 91. Presentation, order to grant Thornton, New York City Police Pension Fund post-audit presentation for the year ended June 30th, 2024.
Hang on, let me.
Just so the board knows, the auditors are joining us remotely.
Sharon, you said?
Yeah.
Okay, you're good. Sharon, we can't hear you. I think you're muted.
Can you hear me now?
Yes, thank you.
Awesome. All right, good morning, everybody. Appreciate that. I'm Sharon Campbell. I'm a managing director of Thornton's Employee Benefit Plan Audit Practice, and I was the lead engagement partner on the New York City Police Pension Fund's audit for this year, as well as the last 4 years or 5 years at this point. This is our 5th year. Before I go into my presentation, I want to give thanks to management. Again, express my gratitude for their help. Kevin, Stanley, I want to give a special shout out to Anna for her responsiveness. She was really helpful during this entire process. All of management is really helpful. It's been a really great collaborative process, so thank you. Can everyone see my screen with the presentation on? Perfect, okay. All right, so with me today, I have Will Richardson, Patsy Iacono, Eugene Brizo from our IT specialist, Brian Abania, and Andy Zimick from our actuarial specialist team. All right, we issued the financial statements on October 29, 2024. It was a clean opinion. Again, the team was very collaborative and responsive. Okay, this is our audit timeline and the scope of our audit. All right, responsibilities and benefit plan audit. So the responsibilities of those charged with governance, you, the board, responsible for overseeing the financial reporting process, setting a positive tone at the top and challenging the activities in the financial arena, discussing any significant accounting or internal control matters with management, informing us of your views of fraud or any suspected fraud, including views about fraud risk, and informing us of any other matters that are relevant to our audit. Management's responsible for preparing and fairly presenting the financial statements and any required supplementary information, designing, implementing, and maintaining internal controls relevant to the preparation of financial statements, maintaining sufficient records with respect to participants. And for a full list of responsibilities, we can share our engagement letter. Responsibilities of us as your independent auditors are obtaining reasonable assurance about whether the financial statements are as a whole are material misstatement, whether due to fraud or error, and then issuing an auditor's report that includes our opinion. Okay, we approach our audit using a risk-based approach. We identify significant risks first. First significant risk is management override of internal controls, which is a presumed fraud risk under professional standards for all audits, not just audits of pension plans. Basically presuming that manipulating the financial reporting process by recording inappropriate or unauthorized journal entries or making any adjustments to amounts reported in the financial statements. To address this risk, we obtain an understanding of the financial reporting process and controls over journal entries and other adjustments, as well as the suitability and design and implementation of those controls. We make inquiries of individuals involved in the financial reporting process about inappropriate or unusual activity relating to the processing of journal entries and other adjustments. We consider any fraud risk indicators and the nature and complexity of any accounts and entries proposed outside of the normal course of plan operations. And using whole ledger analytics, which I'll talk about in a little bit, we test on a sample basis journal entries that are selected through that analysis. Based on the procedures performed, the controls appear to be designed and implemented appropriately, and the individuals appear to have appropriate authorization rights. There were no significant exceptions identified. Okay, the second significant risk related to this audit is fair value of investments, specifically the alternative investments. So the alternative investments consist of investments in investee funds with non-coterminous year ends. Most of the investee funds have a year-end date or a period date of December 31st, whereas these pension funds has a year-end of June 30th. Because of this non-coterminous year ends of the funds, and there is a risk of potential fair value adjustments, which you may be aware of over the course of the last 4 years. We usually have an adjustment related to the lag in the fair value of the alternative investment. Similarly, we had an unrecorded adjustment this year related to that, and we had an adjustment related to unfunded commitments to the disclosures. All right, for investments, how we test the investments, so we confirm investment positions, we evaluate the reasonableness of the fair value disclosures. On a sample basis, we test year-end values to determine the reasonableness of those year-end values. Also on a sample basis, we select purchases and sales that are transacting throughout the year and test the reasonableness of the fair value of those, as well as the reasonableness of related income, so net appreciation, depreciation, and then evaluate the reasonableness of investment expenses. So as I mentioned earlier, was similar to prior years, the adjustment related to the lag in the fair value of alternative investments and also a disclosure related to unfunded commitment. There were no significant exceptions identified in the testing. We also focus on employer contributions, so evaluate the skills of the individuals who are overseeing the process for capturing the contribution information and the controls over the calculation of the employer contribution. We then test the completeness and the accuracy of that as well, utilizing our in-house actuary who tests the inputs to calculate the contribution. Okay, another area of focus is benefit payments. We test the completeness of the population of benefit payments, and then on a sample basis, We review supporting calculations and documentation to determine that the member was eligible to receive the type of withdrawal that was requested, that the benefit payment was appropriately authorized, and it was calculated appropriately based on plan provisions. There were no exceptions noted in this area. And then the other area of focus, which is a significant, which is an estimate, is the total pension liability. Again, using our in-house actuary, our Wealth and Human Capital Services team, we test the reasonableness of the assumptions used in the calculation of the total pension liability. We also test the underlying data, which is the census data. So we test the completeness and accuracy of that census data. We assess the reasonableness of the assumptions, again, in the calculation. And then on a sample basis with the census data, where we focus on change testing, which is taking the prior year census data that we've tested, comparing it to the current year census data, we then focus on changes and unusual changes, as well as expected and unexpected changes. There were no significant exceptions noted in this area. Other area of focus that I'm not going to go into are member contributions, member loans, and ITGCs, or information technology general controls. Okay, as I mentioned earlier, for journal entry testing to address the risk of management override over internal controls, we use whole ledger analytics. It's performed on all entries, not just manual entries, but automated entries, and used to pinpoint transactions that appear to have a higher risk of management override based on a cumulative risk score. So that cumulative risk score is generated based on how the individual transaction performs against 38 routines, which have been designed to identify unusual transactions, those that could indicate fraud, such as abnormal size, abnormal volume, unusual account combinations. And then we subject these entries with high cumulative risk scores to further analysis to isolate a subset of these entries for testing. For the entries tested, we obtain underlying support, evaluate the validity of the journal entry, and obtain evidence of approval. There were no exceptions here. All right, information technology general controls that are in scope. So the in scope systems include COPS 1.0, COPS 2.0, PMS, and NICAPS. Our areas of focus include security administration, program management or maintenance, program execution, technology operations, and cybersecurity. Does anyone have any questions before I move on? Okay. All right, so again, we issued an unmodified clean opinion. There were no scope limitations. Again, we're thankful for management for their open and effective communication. Internal control and any best practice recommendations are continuously discussed with management. The ACFR, the annual financial report, is expected to go out next week. It will include the GFOA Certificate of Achievement for the 2023 ACFR. Okay, talking about, we talked about the audit adjustments earlier. Okay, required communications. I'm not going to go over every bullet point, just the salient points here. So we were not made aware of any fraud or non-compliance with laws or any regulations. There was a significant deficiency, or the significant deficiencies related to segregation of duties and ITGCs, which are included in our internal control letter. I will say we did not identify any material weaknesses. There were no significant issues discussed with the management. We did not identify any significant difficulties encountered during the audit, and we're not made aware of any significant findings or issues that would be relevant to your audit that's not included in this presentation. And we have not identified any material inconsistencies between the required information and the Okay, we're also required to communicate to you the quality of accounting practices. Significant accounting policies are detailed in the notes to the basic financial statements and are considered appropriate in all material respects and are consistent with the prior year. Accounting estimates, the most significant estimates would be the fair value of investments and the total pension liability and the related disclosures to these. We've assessed the financial statements and the disclosures for clarity. Disclosures to the financial statements appear to be informative, consistent, and clear. Okay, our firm maintains a robust quality control system supported by comprehensive policies and procedures that meet or exceed regulatory requirements as it relates to independence. And pleased to report we are independent. You can peruse the slide more if you'd like to in your package. Okay, from an audit innovations perspective, we utilize a lot of innovative technologies for our audits. We use Convene as a PBC list. It allows us to capture any open items as well as dialogue relating to the information we're receiving. We use Census DB defined benefits automation tool. Again, that focuses on the change testing of the census data. We use IDEA, we use T-Beam, Whole Ledger Analytics, and we use Data Sniffer for financial statement proofreading. Okay, we're responsible for obtaining reasonable assurance about whether the financial statements are free from material misstatements. Our audit included consideration of internal control over financial reporting as the basis for designing audit procedures that are appropriate in the circumstances for the purpose of expressing our opinion on the financial statements, but not for the purpose of expressing an opinion on the effectiveness of the plan's internal control. So accordingly, we express no such opinion. Any control deficiencies that were a lesser magnitude than a significant deficiency were communicated to management. Anything that rises to the level of significant deficiency or higher is communicated to the Board of Trustees. This slide just outlines the different levels of control deficiencies. Again, there was a control deficiency that rose to a level of significant deficiency related to segregation of duties over IT that was communicated in our letter issued on November 22nd, 2024. There were no material weaknesses identified during our audit. Okay, as mentioned earlier, we do utilize our Wealth and Human Capital Services, our in-house actuaries, to assist us with the actuarial assumptions used for the pension liability and the contributions. We also use our New York pricing group for valuation of investments. As far as subcontractors go, we are using Galeros Robinson as our subcontractors. We've been using them for, this is our 5th year using them. And other GT offices, so we use personnel, technology, and resources of Grant Thornton Advisors, LLC, as well as our shared services center located in. A copy of the managed representation letter was provided to appropriate members of management prior to release of the financial statements. And then this last slide talks about the New Mountain Capital investment and the alternative practice structure between Grant Thornton and New Mountain Capital. I won't go into detail here, but basically Grant Thornton LLP, which is where the audit services reside, has not changed. Grant Thornton Advisors LLC is where our now advisory practice sits. This alternative practice structure did not change our independence or our ethical requirements. And basically procedures that we performed were inquiring of management and the Bureau of Asset Management as to their awareness of any investment of the New Mountain Capital investments. There were some minor investments there. Okay. And that concludes my presentation. Does anyone have any questions?
Not this time.
All right, if there's no further questions, again, I'd like to wish everybody a happy and healthy holiday season. Thank you very much. I appreciate it.
Thank you. And thank you, Stanley. Thank you, Anna, for your diligence and your hard work and the consistently hardworking environment that you've created there. So thank you.
Page 92, number 14, discussion, UAL reamortization bill analysis, attachment memorandum dated November 6, 2024. Anybody have anything they would wish to say?
The only thing I want to say is that, just for housekeeping purposes, I know we're going to table the resolution today, but I think we can remove the 2 discussion items because they've already been noted in the last meeting. Just housekeeping.
So let's so note those, and now we're only concerned with the.
So you can skip straight to the resolution.
All right. So 2. Page 125 to 132, resolution to approve the unfunded accrued liability payment schedule. But PB is going to table that right now. Page 133 to 135, resolution to approve the VAM corpus personnel budget. Peter's going to table that as well. Moving along. That concludes the public meeting.
Yeah, so I'll make a motion to exit public and enter into executive session.
All right, second.
We got a second?
Second.
Yeah.
We for a second? We had to do that, are we doing an executive session?
Yes.
Okay, so. All right, Nicole, we're gonna do the.
Yeah,